This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. Welcome to Bazaar Morning Call. This morning we are live from the Motilal Oswal studio right here in Mumbai. I'm Sonia Shanoy, and joining me as always Nigel and Surbi as well. Folks, today is really heavy. Lots of earnings, so much data, and we're bang in the middle of the week. How's the Josh?
Well, Josh needs to be high, right? And we're going to be starting IT earnings as well today, Sonia.
Yeah.
So think about Rima. Think about Rima, the way she's going to be battling in the evening, and we'll get through the day.
How's her Josh, I wonder?
Sky high.
But lots to talk about. I think for the global markets, the Josh has been pretty good because we've had, some rock-solid data that has come in overnight. And we'll talk about that. For our own markets as well, it's not been too bad, honestly. Yesterday, it was a bit volatile. We came off from the day's highs. But what we managed to do yesterday was hold on to that 19,400 mark. So the summary is that the uptrend for this market is still very much intact. The buy on dips is very much intact. Just a little bit of volatility and so much data flow over the next couple of days will decide the trajectory for the market. As I said, there was a surge in global markets overnight. The Dow did pretty well, actually. It was almost a 320-point gain. For our own markets as well, the flows overall are a bit mixed, but the FI flows have been solid. So yesterday, there was about 1,200 crores of buying from foreign investors. And in July so far, almost 11,000 crores has come in. Now, if you look at a couple of things to watch, as Nigel was mentioning, today is going to be really data heavy. You have the earnings coming through from the IT pack, HCL Tech and TCS today evening. For TCS, it's expected to be the slowest June quarter in a decade. So there's hardly any revenue growth and the margins are expected to fall this time. But the big question is a lot of this already in the price? Because for TCS as well, if you look at it, the stock is already down about 10% from the highs that it hit in the month of February. It has been lackluster. In the last 1 year, it's barely gone from 3,000 to about 3,270 or so. So is the bad news in the price? That's the question that we're asking. We won't have to wait too long to find out. And then, of course, you have the CPI reading from the US that comes out later today. In any case, 92% of the CME's Fed Watch Tool poll, people who they've polled indicate that perhaps there could be another Fed rate hike in the July policy. So I think the market is bracing themselves for that as well. But all in all, I think the bulls have sort of tightened their grip on the market a little bit. Let's see how it goes from here.
Sonia, I completely take your point, and it's good to be the optimist that we did hold above the 19,400 mark. Allow me to be the slight pessimist over here. It's always a bull and a bear that makes the market, right? Not really a bear, but I was noticing the fact that the market has failed to hold above 19,500 in the last 2 to 3 sessions. So the zone of 19,500 to 19,520, it's a very minor resistance of sort. I mean, nothing much to, I think, worry about. And Nigel will talk more about how the options sort of, tally stacking up around some of these critical levels. But the fact is that this is something which has been a mini challenge for the bulls, but no problems in the broader market. And that's giving us a different indicator. The kind of momentum we're seeing in mid caps, the buying, whether it was defense stocks or these EMS stocks yesterday, that's really telling you where the money is. And the money has been flowing in. We've seen the mutual fund flows, small cap funds, really raking in the moolah, mid cap funds. That's where the money is coming in. And it's this part of the market that's really on fire. Now, in terms of the data today, I call it a bit of a, test day for the bulls. Because the first test comes in the form of inflation, not just US inflation, India inflation as well. We'll get our CPI numbers today. The estimate is we'll still be around the 4.5% handle. However, the watch point is food inflation. And the sense is that the kind of declining trend that we're getting on food inflation, that might be arrested. We all have seen the headlines and we've all gone to the grocer, right? We know what's happening with those tomato prices. So I think food inflation will be a little bit of a watch point when you're talking about India CPI today. In addition, I'll just run the US numbers as well in terms of the expectation, because that's the major agenda setting in terms of the global market framework. The US CPI expectation is a 0.3% increase month on month and a 3.1% increase year on year. And as Sonia is pointing out, anyway, the market's kind of baked in at least one rate hike in the June meet itself. One more facet, when we're talking inflation, look at crude oil prices. Very quietly but silently, this Brent has moved to the $80 a mark. And this is a 2-month high for Brent. The dollars are a 2-month low, but Brent is getting at $80. So that's something that, perhaps one can't ignore, especially when you're talking about the inflation narrative. On IT earnings, Well, of course, we're talking about a very, very flattish quarter, no doubt about that. And this is, I mean, the numbers are as flat as it can be. 0.2% constant currency growth for TCS, 0.3% for HCL Tech, and a margin decline, a bigger margin decline on TCS because they did a wage hike this quarter. So that's the expectation that the market is going with. Now the positioning on these stocks. Since the bottom, and the bottom was made when we got the Infosys numbers, so since April, it was, I think April 19th was the day, since that point, how much have the stocks rallied? TCS about 7.5%, but the bigger rally happened in HCL Tech, 15%. However, in the last 3-4 sessions, HCL Tech has come off very, very sharply as well. There's been about a 4-5% decline on the stock already. So net, maybe you can argue that the market is going in, not very heavy, obviously. However, the stocks did run. We are not at 52-week lows for these stocks, so we have to, bear that in mind. But I guess as long as there is no joker coming out of the hat and there's no some big nasty surprise about very negative commentary, I think the market will be able to perhaps digest and move on because we've moved higher regardless of IT.
And it's interesting, this time this is the first time I think HCL Tech numbers are coming before Infosys, right? So the commentary from the management is something that could set the tone as well.
Yeah, so IT either it'll be in a phase of consolidation or maybe you could see a bit of a downtake. So you can't really rely on IT to fight for the bulls I'm talking about. But today, what's going to be important is the Nifty Financial Services Index as well as the Nifty Bank. And yesterday, the reason that we ended virtually, at the lower end of the range is because the Nifty Financial Services Index, well, it played out expiry. So from around, 2:45, 3 p.m. odd, you did see that the Nifty Financial Services Index move lower. And that's what pulled the Nifty as well lower. A screen should come up for you on that front. But otherwise, yesterday was actually a good trading session because the Nifty Financial Services Index, well, that ended lower. But the mid-cap and the small-cap indices, well, there was green out there, and there was bright green. Small-cap index, I think, was up close to 100%, and the mid-cap index as well was up 0.8%. So portfolios would actually be feeling good yesterday, despite that little bit of a jitter that we saw in the final hour of trade. The key to track, or the big question today will be, can the financial stocks and the Nifty, bank stocks, can they reverse yesterday's expiry-related move? Because that's what the bulls will be tracking. And if we need to bounce, then it has to come in from the financials as well as the banking names, given that we have IT earnings that are coming in and a bit of a whispers, maybe it'll be a rather tepid set of numbers that will come out. The FIs, well, they didn't do much on the index futures yesterday, and they continue to remain net long with close to 72% of their positioning on the long side. On the option side, two strikes I'll highlight, 19,500 call. There appears there is some writing out there. The premium from around 70 rupees, it ended at around 35 rupees odd. So there is a sense that there is writing out there. But at lower levels as well, there was some action at around the 19,400 put, which brings us to the level. Just plugging in both those two premiums. Well, on the downside, 19,360 becomes extremely crucial support. And on the upside, there is resistance being seen at around 19,540. And in the last two sessions, last three sessions, we have gone a couple of times above the 19,500 odd mark, but we can't hold on to those levels. Those are the recent highs that we're looking at. On the Nifty Bank, well, maybe we're 1% away from very, very crucial support zones. The 20 DMA as well as the 50 DMA, both of them, very, very crucial support zones is what we're looking at on both of them. 44,300 odd, that's a crucial level on the Nifty Bank that you should keep an eye out on. The GIFT Nifty suggesting a flattish start. Let's see whether or not the Nifty Bank as well as the Nifty Financial Services Index can bounce back.
Okay, but the important thing is there's still some green on the GIFT Nifty, so not too bad at least, I guess, as we start things off. Well, let's tell you what's lined up on the first half of the show today. We get you updates from markets across the globe. Jahangir Aziz of JP Morgan joins in to talk about the global setup, given that it's all about inflation and the next round of central bank meetings. Of course, our research team also brings you the CNBC TV18 list of top 10 stocks to watch out for the day. At around 8:30 a.m., we will do a fundamental stock analysis with Devin Choksi, talk about some of the movers and shakers that are in the news today.
All right, very quickly, let's kickstart the show. We have plenty of opinion coming through. And first up on the equities front, Vikas Jain of CLSA says that the sentiment reading as per the CLSA India Bull Bear Index has jumped from 9% to 92% bullish as the Nifty has rallied 15% in less than 4 months. However, another 5 to 10% up move is possible if the Nifty extends to bull case valuations. Now, the difficulty in picking the top of any rally has led them to gradually scale down the risk as sentiment has extended to an extremely bullish point. they have booked an outperformance in DLF and HCL Tech. They've added back Infosys to the India portfolio. Interesting. CLSA also likes banks, insurance and energy, and they are underweight consumption and IT. Interesting. They are underweight IT, but they've added
Infosys. That's an interesting positioning from CLSA. Well, let's get to the money market action as well on the rupee. Kunal Sodhani of Shinhan Bank says dollar index dropped for the fourth consecutive day to below 101.5. That is the lowest in 2 months. While 100.85 remains the technical support for the DXY. The US 10-year Treasury yield cooled off as CPI data is due today, and it may provide more clarity about interest rate guidance. The dollar-Chinese yuan pair also cooled off. For the rupee, Kunal sees 82.15 as a support, while 82.55 could be the resistance for the day.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says that the domestic bond yields initially moved higher, tracking a rise in US Treasury yields on the hawkish FOMC minutes, but retraced after good demand in auction and short covering in the benchmark bond. Now, for the rest of the week, the market would assess the India and US CPI data and the auction demand. He expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.17%.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, let's run you through the list. We're looking at ITC, Lupin, Tatva Chintan. We have HOEC, Prestige Estates, PVR Inox, as well as Havells. All of them on the back of positive news flow. On the flip side, Delta Corp, Zara, and Happiest Minds will be reacting to the negative news flow, as well as the GST changes that we saw late last evening.